I want to take a look at the dollar and US dollar pairs as they are in rather vulnerable and interesting positions that could continue the trend or could provoke a really big change in the market. Just first to mention, tomorrow on Thursday, 27 April is ECB rates and conference, so that'll have an effect on the euro. Now, just starting with, I'm going to look at the dollar, the DXY, and then euro, pound, Aussie, New Zealand, just briefly to go over this. Now, the first thing I want to say about the DX is that the current bullish percent on this market, on the US dollar, according to Chicago, is only 22%. That's it. So that is extremely low. So that kind of thing, in addition with an overall corrective pattern, could provoke a bullish move. Now on Friday we have GDP news, US quarterly, I think, prelim GDP news. So that will have an effect, most likely. And I've been talking for several days, maybe a week or so. No, since the weekend video, I've been talking about a possible change in trend in the US dollar, according to this count. It is possible. It needs, in my opinion, to break down a bit further and to have a more corrective looking upward swing to it. And then I would consider it. In the current stage, I have to stick with what's been working long term, and that is a bullish US dollar. So unless we see further breakdown, I'm going to adhere to a bullish dollar view for now. I'm just posing the counter possibility. So looking at this, with the 22% bullish stance at the moment, which is very low, we do have divergence setting in here on the US dollar. Lower price, higher stochastics. This may see a turn then. I don't really consider the trend line break significant yet. It could be a false breakout. So it is in line still for a dollar move up because the whole thing looks corrective. So I'm going to stick with that for now. Now go into the tradable pairs that I have in front of me. Now looking at the bearish view on euro dollar, which has been working for quite a long while. There is a way to view this as a possible ending diagonal. Now, there are a few different counter moves, I suppose, but one way to look at it is to actually divest the chart of the triangle idea and to adjust it so it looks more like a ending diagonal like that. And if you see now, this gives a completely different view to the market. So we have a series here where, following the steep decline, this was our three-wave correction. And from then, we've had a series of moves, 1, 2, 3, 4, and maybe one more low for 5 of an ending diagonal. That is possible. That is probably the best bearish view I can see overall. So it's something to consider as probably the leading bearish view overall. So in line with that idea, I'll just put the triangle back, in line with that idea, this current sweep up here can be seen as corrective. This originally I was viewing as corrective. I still think it looks much better as corrective. It would have to be a real forced idea of a leading diagonal for the first part. So anyway, that's corrective. The next segment down is corrective. This I was tracking in the past videos as corrective, A, B, and 5 for C. This is obviously corrective here. And what we have here in this bullish upward swing with the gap from Sunday's open, and if the French didn't have their elections on a weekend, this would have been tradable. I think the same issue is coming with Germany. They have weekend elections, so that kind of mucks up tradable circumstances, as if you're not in, you're going to miss out on a winner. So in any case, this last upward swing, it looks like it might be one step away from a high. How I'm looking at it right now, first of all, yesterday's candle was like an engulfing candle. So I'm not going to be bearish off of that. The green looks like it engulfs the red. So I learned how to trade from candles, and I still use them as a mainstay in my approach because they have a real impact I can go over that in a separate video, but there's a lot of info on the market about candles and their connection to one another. So in any case, how I'm looking at this last segment right here is as a possible 5-wave move. So it looks on the, which time frame am I on? The daily time frame. It looks like 1, 2, 1, 2, 3, 4, 5 for wave 3. So maybe we'll see another high like this, and that would complete 5 waves overall for this segment. I'm not really bearish from this point. I would see it a bit higher in reversing, so that may come. There's also divergence on this chart, and this whole sweep here can be labeled correctively. It could be, well, there are a number of ways to do it, but if you mark the first as 3 waves, an X wave, and then you have 3 here with 5 for C of the last part. In any case, however you want to look at it, it does appear in total, in sum, as being corrective. So that is the bearish view, and I'm going to give precedence to the bearish view. I don't want to incorporate a bullish idea into this because we are beneath all levels of resistance, and sentiment in the US dollar is too low really to have a high in. Markets do collapse in extremely oversold conditions, but the US dollar is not in an extremely oversold position. So I'm discounting that idea. So a bullish view on this, just to pose an alternate view, this could either be viewed as a leading diagonal or a series of, or a 1, 2, and you would have to adjust the count here for a truncation. It could be 1, 2, 3 for the last part, and we're in the middle third now, which would be very strong. So there are a few bullish views, but they will only really take precedence and be a mainstay once a breakout occurs. A breakout would have to probably pop this line here and continue up overall. So that's how I see this chart. So I look for bearish opportunities into Friday on the next high, basically. So on pound, I don't have a bullish view. I'm still viewing this as 4 overall from the high. So I'm still looking for lower in the pound. It's still got a bunch of divergence on the chart. I mean, for a great divergence view, it's often better to have this line beneath the 80 line. Like, for example, the ideal divergence situations in the stocks as I have them set them up, as I have them set up. If you look at Euro Canadian dollar, back here on the 4-hour chart, this is the ideal kind of divergent play, in my view. Higher price, and on the stocks, you have a lower situation where the next high here stays beneath the 80 line and turns over with a bearish candle. That's a kind of ideal short position with divergence that can happen on any time frame. But on pound US dollar on the daily, it's still set up here for one more high. This is just going in some sideways pattern here. So it's still set up for 1, 2, 3, 4, 5 and to turn over. So see if that materializes. Like I said, no bullish option on this. I don't really know what that could be. You could force a leading diagonal out of this mess over here from last year, and then you have a corrective sequence here, but I don't know how to view the rest of it bullishly, as it looks like several corrective waves into here anyway. So this pair is bearish in my view overall. Aussie US dollar is also bearish in my view. You could make a case of a bullish triangle here. The only issue I have with this is the bulk sequence here, which I went into detail about maybe a month ago. The difference as I see it is that this is impulsive, whereas this, and this into there, into the small c, those are all corrective swings. So you have an impulsive downswing followed by 3 correctives moving up and down. And so I have to give precedence to the bearish view here because of this sweep. So I still like the idea, looking at it a number of ways, that, for example, this is a bearish sweep. We have 3 waves like this, and then one more move down for a low, and then the bulls can come in. So again, this pair looks more bearish than it does bullish. It's just that on the next low, it may open up for a bullish triangle view. I'll have to see if that materializes. It can, but for now I'm holding bearish against this pair. I don't think it's in 5s from the high. I also don't agree with the idea that this C high is wave 4 overall. I think it's more likely to be some kind of correction in here, and that if we're going down for D, it fits that this swing here is 3 waves. I can't really put 5 into that, and now we've got another swing down in possibly 3 waves and then a bounce. So that is my preferred view. And on New Zealand US dollar, this has been difficult here in the last week or so, but again, I do not have a bullish view on this. I still have a bearish view lower for W, X, and Y. So how low that Y heads down, I don't know. But I still like the bearish view here. Now there's going to be some divergence coming into play eventually. But for now, I think it holds with a bearish view. I feel I can't really offer a bullish view about this because this segment here looks corrective as well. A, B, and 5 for C, as I see it. So I can't. So basically, pound and New Zealand, I can only see bearish setups in for now. Aussie, there's a possible bullish setup, but it needs to be confirmed, though I think the bearish one takes precedence. And Euro is more unclear in that it could go either way, but because of resistance and chop so far from January, corrective pattern since January, I think the bears are more likely to have it. So that is my view overall in 2 different scenarios, bullish and bearish. I think the bullish dollar and bearish other pairs, that view is much more likely for now. The only thing that'll change that view is if I see a dollar breakdown, like a much steeper move here and then a tiny correction. That would change my view. And a breakout on euro dollar and then something unexpected on cable. So I hope that clarifies something. And I hope it clarifies something for myself too, frankly, because I've been considering very heavily the bearish dollar view, and I will continue to consider it so long as this does not react in a bullish way. So let's see what happens into Friday's GDP, and hopefully we can find a trade, preferably staying with what's been working over the past few years, which is bullish dollar. Okay. All right, best wishes. Bye-bye.